So hi everyone, I'm here with Freddy Kelly, who's the CEO of Credit Kudos, who are in the credit bureau and open banking space. So great to be with you, Freddy. Thanks very much for making the time. Appreciate it.
Thank you for having me.
So I suppose first off, I'm kind of interested in some of the things you've been seeing. I mean, so we've chatted for a while, but some of the things you've been seeing from through the pandemic in terms of the open banking product and sort of your product over the last really sort of 6 to 9 months.
Yeah, of course. So for those of you who don't know what we do, we're essentially a credit reference agency and as well as an open banking provider. So we're really interested in the intersection of this new data source, open banking data, with credit risk and how you use that data to kind of understand more about your borrowers and what their needs are. And in the last sort of 6 months, from sort of September, we've seen the volume of people opting into open banking solutions across the board double. So it went very quickly from 1 million users to 2 million users. And that's not individual connections, that's unique customers opting into open banking solutions. There's been a couple of things that have sort of been driving that. Obviously, when you look at kind of fintech and digital banking and digital transformation as a whole, like people need to transact online now. There's just no like in-branch, paper-based alternative. So open banking as a facilitator of digital connections and data sharing between customers and the businesses that they're borrowing money from has been one source of growth. But also the kind of change in economic environments of individuals. So things like furloughing, payment holidays. We've obviously got new loans, emergency loans from the governments for small businesses. All of those have meant that the sort of patterns in customer accounts and resulting credit risk profiles have really changed almost overnight. And so open banking has been a crucial tool in helping companies understand what the circumstances of their individual customers look like and helping them deal with those.
And when the pandemic hit, I mean, how much of a spike did it cause in terms of like digital adoption and open banking adoption? Because I mean, it was on a growth curve before. I mean, the pandemic hit, and now everything feels like it's kind of gone digital. Was it really dramatic?
I think yes. I mean, the thing that I sort of really noticed was kind of attitude change as well. Like, we talked about, you and I were just talking about people working remotely and how quickly the transformation took place. I know that some of these big enterprises have had sort of like 2-3 year investigations and projects going on as to like what the future of work looks like and whether we should work from home. And the idea that we'd all just suddenly drop everything and go home was unthought of until it had to happen, and then it was able to happen really quickly because it had to happen. And so similarly with our customers, open banking for the last couple of years, it came into to existence in early 2018, and there was an initial kind of slow adoption curve, and now that sort of really ramped up. And one of the things that we've seen in the last 6 months is it sort of went from like a nice to have to a need to have. And so there's nothing you can argue with there. The attitudes of our customers really changed, and they said, I need to do this now, and this is for a wider audience. It's going to be crucial to the way I underwrite risk. And so that's the real acceleration we've seen, and obviously that in turn has bred more use and more customers getting comfortable with the standard, which has meant more sharing and so on and so forth.
And in terms of like where open banking sort of sits, I mean, it seemed like there was a lot of traction in the front end in terms of acquisition and doing affordability and those kind of things, and there was sort of quite a bit of adoption in that. And the back end collections piece was a little bit of a harder to get people to adopt it. Has that piece particularly changed because there's more financial difficulties around? Or is it and is it less on the acquisition side than it was because now it's more around financial difficulties on that side of the business?
Yeah, I mean, I've definitely seen that use case growing, and there's some great companies doing work in that space. We're partnered with a business called PayLink, and I'm sure you know that provides services to, among others, the largest sort of debt advice companies in the UK, PayPlan. And I guess with open banking, it's always been about value exchange, and so whereas traditional credit data kind of can be shared more or less under the surface from a customer perspective, you really need consent from an individual to get that data. And in lending, there's a clear value exchange that says, share this information, you'll get a faster application or a lower rate of interest, or your acceptance likelihood will be increased. And so for cases in the use cases in the kind of debt advice and sort of forbearance space, it's been, well, what's the equivalent exchange, because I'm already a customer at that point. And so that question has always been the one that's kind of made that area kind of, I guess, more nascent. And we've seen, some really simple propositions work really well. The first thing is that when you think about the analogs, to do an income and expenditure analysis over the phone, it's quite painful. Like, it's quite slow. It's fraught with inaccuracy if people give the wrong information. Not very many people are very good at coming up with, how much did you spend on XYZ category this month. And also, you're typically speaking to someone in a call center that you don't know, that maybe you don't want to share that information with. And so giving people a way to do that all in their own control, away from sort of someone looking at it, and actually give them a sense of them being in control, which is very often what people that are struggling with debt, really lack. And it's a really helpful feeling to kind of be able to give them. That's really something that open banking can provide, given the right solutions, and allowing people to kind of self-remedy. Also presents a massive cost saving to the providers that normally would spend a lot of money doing this stuff manually. So those have been some big drivers for us, and we've also just seen, again, willingness to share data grow, and that's a function of the solutions, the user experience. If you can say to someone, I remember sort of early on in that kind of initial stage of the development of open banking, there were kind of people doing surveys saying, oh, Mr. Joe Bloggs on the street, would you share your banking data with a third party? And obviously they said no, because that sounds terrifying. But if you say, oh, here's a secure bank mandated, FCA regulated way to share your bank statements that doesn't require you printing off a piece of paper or getting a phone call and having to go through 45 minutes of an income expenditure analysis, then people say, yeah, absolutely, that makes sense for me.
And I suppose it's just, with digital adoption, people within the pandemic, we just got so much more used to having everything on our phones or everything done automatically, and it's almost like, because you can't go and like send paper copies into the bank, or send them through in the same way as you could before. And I think that's sort of, is that's sort of been changing habits to a certain extent. It kind of feels, at least anyway. Is it easier to get investment? I mean, so one of the things that has always been a challenge, particularly in the collections world, has been around getting investment for digitalization and digital projects. A lot of this has been on people's roadmaps for a long time. Through the pandemic, it felt like that kind of changed, where almost like it's become much more of a necessity, and so that's sort of gone up a little bit. I mean, you're finding that almost like from going to your clients in terms of getting the okay to put some of these new processes in place. There's more investment that's kind of available. Yeah,
I think so. I mean, I guess it comes back to that like nice to have versus need to have question. Like, previously that there was a huge allure to digitization, but it was never top of the list in many cases, because it meant investing in new digitization platforms, transformation projects, stuff that would normally take a long time. And I guess we've sort of proven that doesn't have to take a long time. You can kind of retrofit and adapt quite quickly with especially with sort of SaaS players like ourselves and others that don't necessarily require like a big integration burden. So actually the investment isn't that big to begin with, which is great, but also it necessitates it, like you say, you're not able to reach customers in the same way, and just the idea of having to kind of do these things the manual way, it's almost impossible. And you can kind of expand your reach, your sort of bandwidth with a digital process, because it's almost elastically scalable, and also you can cut down your costs, because you're even if you still have to have a phone call, why not have a phone call where you're the person that's doing the triage or the advice is sat at a screen with all the information neatly laid out in front of them, and they can
have a nice conversation.
Exactly, and they don't have to ask all the hard questions. They can just say, okay, I've got your information, let's talk about it. So I think that finding the investment inside the businesses to do this stuff is it's always been on the roadmap for these companies. It's just been pushed up to the top of the list, which is the key kind of catalyst that the lockdown has brought.
I always love this idea of co-browsing. So you can see the information the customer kind of sees, and you can have that conversation about the same information, and it sort of like changes the dynamics somewhat if you're actually having a call, at least, as much as there's automation kind of opportunities.
No, I totally agree. I think it's a much nicer conversation to have, and there's no uncomfortable conversations for either party.
Yeah. And one of the things that's on the radar is Brexit. and I did see that the FCA came out with some guidance around impacts. I think it was around PSD2, which would impact some of the stuff around some of the standards around for open banking. Do you have a view on that, or I mean, how much of an impact do you think that's going to be, or do you think the FCA will probably have it covered?
Yeah, so there are a couple. I mean, there's a plan in place. There are a couple of sort of technical intricacies to the way that open banking's implemented, and it's particularly pertaining to the passporting of regulatory permission. So as a sort of PSD2 company in each each geography in Europe, they're basically the regulation is delegated to the competent authority, which in the UK is the FCA, and that's who provides us with an AISP license. And there are equivalents in all the other EU states. And pre-Brexit, obviously, you could kind of passport that permission and operate in those countries. And so companies that have done that now need to essentially have an entity outside of the UK that's still in the EU to retain that ability and kind of update their permissions. And there's also some more technical intricacies around EIDAS certificates, which is sort of the way third parties certify their credibility against banks and how those are managed. So there's been definitely some additional work that's been created as a result of Brexit, or the impending Brexit departure. So it's not without challenges, but I think for most companies that are sort of operating in this space were kind of very aware that this would be an outcome, and have prepared for it, and have got plans in place, and have sort of built those changes into their roadmap. Okay. So it's a challenge, but it's not insurmountable.
Yeah. So we'll see what happens, but it sounds like it's covered at least anyway. So
yeah, exactly.
And how are you finding? We've obviously been working at home, and we were just chatting about our various locations where we were before we started here. I mean, how have you found that in terms of having a distributed team, working from home, those kind of things? I mean, is that been an easy transition for you and the team, or are you, or is it you're finding challenges?
Yeah, I think in the grand scheme of things, we're very lucky as a business that we operate sort of like a trustless architecture. So there's no server in the office that we need to have access to, or network or anything like that. So everyone's got a laptop. They have security credentials that they use to get into the system, and they can work from anywhere. And that was the kind of way we operated before. And indeed, we even had weekly working from home days where people would go and sort of almost practice being at home, because everyone's got their own lives. They've got families, children, whatever, and need to be able to kind of plan around that. So in terms of the initial transition, there was no issue. I think people easily conflate sort of working from home temporarily and sort of working from home in COVID environments. And actually, the thing that's been really good about the way we're working at the moment is that everyone's at home, so that you don't have this Dave said to me in the office this happened and you weren't involved in this conversation, because you've got this sort of pockets of information. So that's something that I think at the moment we're lucky that we're sort of not having a problem with, but people will kind of might start to see an issue as there's sort of a partial working from home environment in the next couple of months.
That could be a challenge when we go back in the office, isn't it? Like you have almost like an in-office conversation.
Yeah, the sort of water cooler chat stuff, right? Yeah. So I think that can easily be overestimated. The other thing is just personal resilience and morale. We almost were really productive at the beginning of lockdown, because we suddenly had all this extra time that we weren't commuting. But you also, we were just talking about, the dreaded back-to-back Zoom meetings and things like that, and how quickly that can drain your energy. And I found, as a leader of a company, it's challenging to kind of keep everyone sort of feeling that, sort of morale and kind of joined feeling of progress against our benchmarks, if you like. How are we actually progressing? Because not getting everyone together. We have weekly all hands calls. We had, like everyone else, we had our quiz for a while. We've got events and sort of Christmas party stuff and all that kind of thing going on. But just we need non-work time together as a group to bond and build relationships, especially as we've grown as a team and hired more people this year to sort of gel interpersonally. And so that's something I'm conscious of how do we make sure that still happens. And we've been doing things like weekly randomized one-on-one chats where people have 30 minutes where they just chat to each other and it's nothing to do with work. And there are things you can do, but it's definitely a challenge. I think it's easy for you to say, oh yeah, we're fine, we've all got laptops, we can work remotely, and certainly compared to a big bank where they've got physical machines and skyscrapers that are not at all COVID secure. That we're lucky that we don't have any of that, but we've still got all these kind of sort of fuzzy issues that kind of only sort of set in a couple of months in that we we need to think about and make sure that we stay abreast of.
And I think one of the challenges I've been hearing is really around, I suppose, the relationship piece. And so we're so used to sort of doing face-to-face kind of relationships, face-to-face contact to build relationships, and sort of video calls, they work, but they do take some of that stuff away. And we've sort of gone into this sort of using video calls as a replacement for it. But, long video calls can get very tiring. And there's been a little bit of a move towards, do we have more short video calls? Because those seem to sort of help in terms of building relationships. And I suppose the question really is, do you think there's another way we need to start interacting with each other if we are remote than just trying to replicate what we did in real life? Do you think?
Yeah, so I'm a real believer in the written word. So I think that so we easily confuse Slack messages or Teams or whatever with writing. And pinging a message to someone isn't the same as sitting down, writing sentences, paragraphs, pages, and thinking about your thoughts. And it's really easy to have meetings that are kind of pointless because you don't do that first, and you just sort of chat about stuff, and then you have a meeting to set up another meeting. And there's a really good book called Rework, which is by the creators of Basecamp and Ruby on Rails that talks about this process, and this sort of came out must be almost 10 years ago now, and they're quite strong advocates of just not having meetings unless you absolutely have to, and I know that this is something that Jeff Bezos is famous for as well, as you need to have an agenda and a document, a proposal before you have a meeting to allow that meeting to happen. And we're not quite at the point where we're that strict, but actually one of the things I've noticed, and it's been driven by our product team, to be honest, that they've kind of sort of spread this way of working to the rest of the company. But if you want to have a meeting, writing a proposal or a job to be done, or a story, user story, or something that kind of sets out what the meeting's about and gives people context, and then actually running the meeting with an agenda. I know this is kind of obvious, but that sort of way of doing things is, even if we were in the same room, it's incredibly effective. And so doing more of that, putting your thoughts down and trying to disrupt, have more sort of
great structure
in your day. Yeah, exactly. And less interruptions. Having this kind of immediacy of instant messenger can be really negative for productivity, because if you're just letting your inbox and your Slack messages run your day, then you end up just being very responsive and reactive, and not actually doing the thinking that helps other people get on board with what you're trying to build.
And there's so many ways of being able to contact each other now. You mentioned Slack and email and those kind of things. It just sort of, you get the distractions. They just come up all the time with notifications if you're not careful, I suppose.
Yeah, no, absolutely.
So I know you've been looking at some of your data, and you put out a paper the other day, a little bit around, that younger people have been impacted more by COVID. Have you had any insights that really have struck you?
Yeah, absolutely. So we do this sort of quarterly report called the Borrower Index that you can download from our website, and we essentially ask people how their perception of credit and borrowing money is developing and changing over time. And we saw some really interesting things in our November report, particularly around sort of younger generation borrowers. So the kind of the 18 to 24 gap, seeing what kind of a bigger impact in how they reported the sort of impact on their finance, and I guess potentially sort of a greater concern, the fact that they're expecting to or have needed to borrow. So 43% of the people we asked needed to start borrowing since the beginning of the pandemic, and about 20% more sort of expected to, just to be able to cope. And I guess that this comes down to this point around financial resilience, that we see sort of across the board. People needing to sort of borrow money to kind of transact day to day versus for a specific event or purchase. And so that's been an interesting and I guess concerning development, and it's kind of allowed us to sort of think more about, what are the right types of lending models that support those customers, because there's all sorts of credit options available there, and being able to compare and choose the right one when they actually need credit, and making sure that is the right solution is really important. We also looked at this kind of renting population, which was equally affected in the sense that they sort of have less runway in terms of resilience and savings, and they need to kind of need to kind of support that with supplementary income or credit. And again, this kind of increased appetite for credit, which is a challenge, because when you think about how traditional credit scores are calculated, your sort of appetite for risk, or appetite for credit, I should say, can be kind of perceived as a risk indicator. And one of the things we've been sort of thinking from a credit risk perspective is, if people, that were previously prime or kind of good credit profiles, in the last 6 months have had some kind of blip, they've had a missed payment, or they've had a payment holiday, or they've taken out credit where it seemed out of character, all these sort of things. Like, in essence, that that character wise, from a kind of propensity to repay perspective, they're still exactly the same person, and so those changes perhaps shouldn't factor in the same way that they traditionally would, in terms of how they can now apply for future credit, and how that affects their credit worthiness. So looking at these numbers and kind of breaking them down by demographic has been really valuable in allowing us to see, what changes can we make from a product perspective, but also like from a lending perspective, like what are the pockets of customers that are most in need, and how can we build products to serve them.
So customer sales probably haven't changed from their character in terms of ability to be able to pay back. However, the economy's changed, which means that might have had a different impact, because certainly it feels like the population is being cut in a different way. You've got some parts of the population that had probably really good jobs, and maybe those sectors, those employment sectors, are under pressure. Other ones are probably a little bit more secure, but fundamentally people's characters don't change in terms of trying to make payments, and so it's almost like it's added almost like another dimension that we've now got to think about in terms of credit risk and future credit risk, really.
Yeah, I think it's really important, and this kind of comes back to that. Well, indeed, I think a couple of years ago, the FCA put out this paper around affordability and credit worthiness, right, and how they're sort of separate but interlinked. And what you've just described is exactly that, right? It's like my ability to repay, and my propensity to repay in the context of COVID are kind of very different things. I'm still the same person from credit is the sort of trust barometer, right? Credit worthiness. So I'm still that same person, but I've had this big income shock, or I've suddenly had to shell out to support a family member or whatever it is, and all these things that crudely I can't be blamed for. It's this unprecedented, I used the word unprecedented, it's this event that's happened, and so how do you kind of split those out, and having more granular data to be able to do that is really powerful.
The other word we need to use is new normal. So
yeah, we could better, my bingo card's just down here. I'll take it off.
So what do you think the future is? What do you think the future is for open banking, and as we go into next year? I mean, we've had extensions of payment holidays. We've had extensions of like support schemes. Hopefully, there's a vaccine coming in the next sort of the next 6 months or so. What do you think the future is, and as we look into 2020?
Yeah, it's a good question. I mean, I sort of alluded to before that the things that get me most excited are kind of the new products. Like, we've talked about new data as a way to kind of improve an existing process, i.e. the way that we check creditworthiness for maybe a loan or a mortgage or whatever. But at the moment that's kind of like fitting a new solution into an existing problem, and there's no reason that creditworthiness checks should happen at a single point in time, like a sort of snapshot. Why can't they continually evolve throughout the life cycle of a product? And why can't the product be more bespoke and custom around the user's individual requirements? And having this new information is allowing companies to do that. We worked on a project in the credit union space that was sponsored by the Treasury, and built a solution where customers could link their open banking information when applying for a loan, and in doing so would be accepted at a higher interest rate where they previously would have been rejected. But then by demonstrating healthy behaviors through that open banking connection, they could get a rebate for the additional interest that they paid, so that essentially de-risking the lender and the customer. And I think that's just the start of like a new crop of lending propositions. And I know everything sort of from fintech businesses right through to tier one banks are kind of looking at how they serve new customers. You think about the growth in the self-employed and sort of gig economy sector as well. Like the way in which those people transact isn't, they get their salary each month and they pay off their bills. It's much more fluid than that. And so why sort of have a fixed view of how that customer operates and how their risk is measured, when you can kind of do something that fits around that model of working.
Yes.
So I'm really excited about that sort of evolution. We're also keen to see that the FCA pushing forward the open finance agenda, which will hopefully see new types of financial data that wasn't included in the original definition of open banking be available through APIs eventually, and that will obviously be a further catalyst for new solutions and sort of better serving customers.
So sort of like it's all that the extra information you get can then sort of get you extra nuance in terms of additional products, and some discussion around do we even need to have different types of lending products as a result, sort of going forward, and it sort of opens up some of that.
Yeah, absolutely.
Well, Freddie, it's been great to chat with you. I really appreciate making the time, and we'll chat again soon. Thanks very much.
Thank you. I appreciate it.